Good morning, everyone. This is Financial Literacy One-on-One, and today we got a treat. We're going to go over 3 stocks today, and I have some additional information for you guys to be looking out for certain IPOs and what things are actually doing in the market today. So a lot of information. So let's get started without any hesitation. So we're going to go off Exxon, which is a company that made headway when their previous name was Taser International, okay? Taser International. So let me go ahead and share my screen. So let's get started here fairly quickly. Since I have so much information to go over, I think it's imperative. So again, the previous name for this particular company was called Taser International. They changed their name, and a lot of good information about this company. Let me see if I have the information popped up for you guys. What's imperative to note is that Exxon, aka Taser International, actually was giving out body cameras to all cops across the nation, and that has boosted their production and also their stock price, because they say, how, you know what, instead of having ever to pay for these body cameras, let's give them all out for free and then charge them for the service. They kind of did like a Fortnite thing where they gave the game out for free, but for support, cloud support, storage, upgrades, all that good stuff, you have to pay for. All right, let's go over the time chart. So in the past 5 years, they've been up 336%. So that's absolutely phenomenal. Of course, you see some dips and dives here. One of the main ones you're probably going to see right here, COVID-19. You see those. But either way, you see how the stock has a trajectory that's been going upward at over 300%, okay? For the past year, it's been at 38%. The past 3 months, 9%. The last month, it's been down a little bit. In the last week, 3.79%. And today, they're up 0.37%. And a stock like this is long-term because body cameras are not going anywhere. They're not going anywhere. When your local townships, your local sheriff's offices, they're going to start receiving those very small little precincts and little rural areas. They're going to start receiving these body cameras. It's going to become not only national, but also state standard, because you're going to have your federal police wearing them. You're going to have your state police wearing them. Then you're going to have your local community sheriff offices and precincts wearing them. So this is going to be the standard across the board. So I'm looking for this company to absolutely grow even more, okay? All right, let's read a little bit about Exxon. It says, it engages in development and manufacture and sale of conducted electrical weapons for personal defense. Because again, this used to be Taser, the company Taser. It operates through the Taser weapons and software and sensor segments. The Taser weapon segment sells conducted electrical weapons, accessories, and other related products and services. The software and sensor segments include devices, wearables, applications, cloud, and mobile products. The company was founded by Patrick W. Smith and Thomas P. Smith on September 7th, 1993, and is a headquartered in Scottsdale, Arizona. Let me tell you, I am actually Taser certified. When I was in the military, we had to do what they call riot training. Okay, if anyone tried to ride outside the base, whether in foreign countries or domestically, a good number of us supervisors had to be Taser trained. And in order to be Taser trained, you have to get tasered. You have to get tasered in order to be Taser trained. And I remember a buddy of mine, name was John, and when you shoot this taser, right, I think it was the model XM8. Before you shoot your taser, just like the police do, you go taser, taser, taser. So the guy was lined up behind us. We were in regular clothes like anyone else, but we had on shorts. So one supposed to go below his lower back, using in his buttocks, and one goes in his upper body, right above the lower back part, maybe his big muscle groups, okay? Because you want to seize up the body in order for them to be shocked and fall. This is what we was learning. So my buddy John had the audacity. He shoots low. So both of these probes, they have barbells, okay? They're hooks inside your skin. That's why they just don't come out. He shot it low, and they both went in my calf muscles. Instead of my body seizing up and locking up, my body broke down, and I went down. It's a whole video. I was trying to get the video to show you guys, but that was such a long time ago. The guy who actually recorded, I could not find the guy, but believe me, it was hilarious. And let me tell you, tasers are not a joke. Anyway, employees, 1,300. You see where it was founded. You see the market cap. Okay, let's move on. Collections, manufacturing, defense, technology, U.S., and the rating. So right now, the analysts are saying 62% buy, 38% hold, but do not sell this stock. Again, this is one of the long-term stocks I'm going over for today. All right, look at the quarterly earnings here. It's doing fairly well. Now, granted, you see a big dive during quarter two, but this is nothing really significant for you to pull out your money or for you not to invest in this long-term company, because again, the future for this company is looking pretty good. It's looking pretty good. Now, they're still operating out of a little debt, but that's okay. Good morning, Clan Killer. Good morning. Nice to see you today, sir. All right. People also bought in this sector: Square, Trade Desk, Shopify. None of these really relate to this defense company, okay? All right, let's move over to Market Watch when it comes to this per share. So this is really good information. In the last 52-week range, it was at $50 roughly to $105. $50 roughly to $105. Because if we go back here, right now, Exxon is at $83. $83. So whether you want to buy whole shares, fractional shares, or a long-term option, I believe this, going over the analytics of it very briefly, because we never really dive deep, okay? We dove absolutely deep inside this. Each stock I do would be around 45 minutes. You wouldn't get any additional good information on the side, because analytics, we start getting into the Wildest RSI, we start getting into the RSI, we start getting into the estimated movement averages. When we go here, we're diving so deep, and we're still not getting on PE ratios. We're not getting on earnings per share. We briefly go over some things so you guys decide if this is a good stock to buy into and invest in or not. Okay, moving right along. See, we look over here, the month, 3 month, year to date, and 1 year looking pretty good, solid. The only thing I see is that they're operating out a little bit of debt. But again, that does not tell you how a stock will perform. It's just one of those good information, and mainly to see if they could ever pay you dividends or the amount of dividends. All right, here's some top news here. See, Digital Ally, Simtrex, and gun stocks power high as social unrest fuels investor interest. Remember, I told you that the stock market is an emotional, fickle beast. Okay, because look at the headline here. It says Digital Ally, Simtrex, and gun stocks. Simtrex and gun stocks power higher, meaning they're going up in value and dollar amount, as social unrest fuels investor interest. So investors are looking at the civil unrest, the social unrest, as an opportunity to buy in gun stocks, as an opportunity to invest in a company like Exxon that does body cams and tasers. Think about that. I told you the news is a great analytical source, okay? All right, let's see what else did we have. This is just a fun one here. CEOs of S&P 500 companies earn more in 2 days than the average worker will for the entire year. Investing is very, very powerful, okay? Investing is very, very powerful. Let's see what else do we have. That's pretty much it for that particular stock. I was going to read some additional information, but since we have so much to cover, let's move on to Grubhub. Grubhub. Now, I remember before DoorDash came out, I was using Grubhub sporadically across between them and Uber Eats because this sector is growing very, very largely. Now, because of coronavirus, these companies are doing fairly well. Now, the investors, see, when you look at a company that's performing well, but investors are looking at their business model and you don't see that their stock are like rocketing up, that's because investors are unsure about how that company is making its money, how it will maintain and increase its profits. So they are worried about how many stocks they actually buy. So that's imperative to actually take notes of that, because just because a company is doing fairly well doesn't mean their stock will, because investors need solid numbers. They need solid results when they're looking at projected amounts. Okay. Anyway, let's get into it. 5 years, Grubhub, 190% roughly. That's really, really good. Let's look back here. Let's see. September 14th, 2018, they were up $146. Okay. Now they're at $76. In the past year, they've been up 31%, 3 months, 33%, 1 month, 8% roughly, 1 week, they've been down 3% roughly. And then today they're up. Okay. Today they're up. The collections that they're in, you got seafood, hospitality, and software services, of course. If you don't know anything about Grubhub, let's look into this. Grubhub operates as an online and mobile food ordering company, which connects diners with local takeout restaurants. Its online mobile ordering platform allows diners and corporate businesses to order directly from takeout restaurants in the United States and London. The firm's products and services include Grubhub, Seamless, and Eat24 mobile apps and mobile website Grubhub Seamless, Eat24 and Menu Pages websites, corporate program delivery services, Grubhub for restaurants, technology and fulfillment services, point of sale integration, restaurant websites and mobile applications. Grubhub was founded in 2004 and is headquartered in Chicago, the Windy City. They have roughly 2,700 employees. Their market cap is a little bit over $7 billion, and their average volume is 1.37 million. What's a good note of information here is that Grubhub either or is in the process, but I believe it was acquired by a Netherlands company called Eat Something 24. I thought I looked this up for you guys. Give me 1 second. Believe it was like Just Eat Takeaway or something like that. Here it is. All right. Just Eat Takeaway. Now, this company is headquartered out of the Netherlands. It says, however, on June 9th, 2020, Just Eat Takeaway announced it would be purchasing Grubhub for $7.3 billion in an all-stock deal. The acquisition would create the largest online food delivery service outside of China and provide Just Eat Takeaway with a base in the U.S. market. When I think about China and I think about delivery service food, do Chinese people order Chinese food when they're in China? I'm just joking. That was funny to me. Anyway, I think it was funny. Some of the other collections of food, software services, restaurants, technology, internet, and then, of course, the 2014 IPO, they've been doing pretty darn well. Okay, I don't see a buy rating for Grubhub. Again, this is a long-term stock. As you see, 97%. I'm not going to even look at the sales. It's under my 25% rule. They have 97% hold. Okay, 97% hold. Let's see what some of the bulls from Morningstar are saying. Grubhub more aggressive, as spending in the short term could yield brand loyalty in the long term. Grubhub should maintain its early movement average, as this has helped the firm partner with more restaurants across the U.S. than its competitors, attracting more diners. See the growth there? We're talking about growth. Processing more online takeout orders and accelerating top line growth. I didn't even read this earlier. See how they in my head. They read my notes. The scalability of Grubhub's platform could lessen the firm's annual capital expenditure and allow it to lower its take rate and compete more effectively with newer entrants in the market. Okay, what we have over here. Grubhub may face emerging threats from larger tech firms like Amazon or Uber, Grubhub needs to continuously spend to acquire diners, while competition may someday force it to lower take rate for restaurants, both of which will pressure margins. Okay, so nothing really significant there. Report. We're looking at their quarterly earnings. Q4, they were doing well. Q1, they went up from Q4, and now they're down. If you notice, some of the stocks here are down on Q2. Okay, they should be reaching Q3 here pretty soon. All right, people also bought Uber, Lyft, Twitter, and Square because Grubhub is a delivery service, so they kind of in the factor of the gig economy when they're talking about people who are creating jobs through software apps like giving people ride share, Lyft, Uber Eats. And then we're going to get into DoorDash, which is kind of my side information for you guys. Just good to know information. Good to know information. Let's go over to Market Watch and let's type in old Grubhub. Old Grub. I know I love me some Grub every now and again. My body looks like I've grubbed all my life. Anyway, let's read some of your notes. I don't want to ignore nobody inside the room. Who we have inside of here? Okay, Clan Killer, we got an A. Said I typed 3 stock on Robinhood. Which one is it, Ross? All three. We're going over 3 today. We have Renee in the room. I will check out the recording. I am at work. Oh, and a sad face. I'm sorry, Renee, but it will be here for your enjoyment later. Jermaine Anderson, good morning, Brother Ross and everyone. Good morning, Mr. Anderson. You get it? Good morning, Mr. Anderson. Anyway, we have Mitchell Liggins in the room. Good morning from Alaska. Ooh, is it cold out there, man? It's probably a little bit warm. Anyway, you probably have bears and moose going through your backyard. I'm pretty sure of that. Anyway, let's move right along, ladies and gentlemen. So the 52-week range was $29 to $79. That's a lot of movement. That's a lot of movement, and I love it. That shows a lot of growth, okay? And today range, they have been from 76 to 77. They're operating out of debt, just like a lot of these gig economy works, but they're still growing. Okay, what else is important to note here? 8 cheap restaurant stocks that are worth, the great pandemic is really the great accelerator. Look at this right here. This is interesting. August 18th, the great pandemic is really the great accelerator. And he doesn't mean for the entire economy. He means for certain organizations and companies like Grubhub. So when people are looking at, like, I remember we was at home sitting down, we want to order some food. So we're using DoorDash, Grubhub, Uber Eats, and then you're probably ordering your movie through Disney Plus, Netflix, or Prime Video. So a lot of these things that people are working from home, staying from home, movie theaters are not opening. Some restaurants you have to socially distance, some are not even open. They only do delivery only. This has helped out a lot. Okay, this has helped out a lot for those particular businesses. Let's see what else do we have. This was back in July 31st. It says that Grubhub stock price target raised to $72 from $63. That's a $9 jump. That is good profits, okay? And then it goes back. Grubhub stock price raised to 70 from 46. And see, here's the thing. We should have been investing in Grubhub a long time ago. Let's go back to our line chart just to get some context and some reference, right? Any day, Robinhood, any day. Here we go. All right. So let's look in this past year and let's look at some dies here. Let's look back in July. See, that's March. Let's move a little bit here. We got May and we got July. Let's see here. When was it? I think it was around March, right? So look at March right here, guys. This is, and I was telling people this a long time. Now, I'm not invested in every stock, okay? If you got enough money to invest in every stock on all 3 markets, whether it be the New York Stock Exchange, the S&P 500, and the NASDAQ, then you balling, okay? You absolutely balling. You have enough money. But I was telling people during the pandemic, this is not the time to sell. This is the time to actually buy, okay? And we understand. I'm also going to give you information today that is regarding to Tesla, because Tesla is doing a 5-to-1 stock split, and we'll get into that information as well. Very, very important information. Did I close out my email? Anyway, we'll get into that nonetheless. All right, let's move right along because again, we still have another one to cover. Okay, we have another one to cover. Now we're going to look at JD.com. JD.com. Okay, let's look at the time chart in the past 5 years. They've been up 237% in the past year, 162% in the past month. They've been up roughly 42% in the past month. Excuse me, that was the past 3 months. This is the past month. 24% in the past week. 12% in the past day. They're up 2%. This stock is booming. This stock right here is booming. It is shooting out of the gate. And some of you say, hey, it's $76, it's $77. Listen, I don't have a whole share of Tesla, but I have money in Tesla. And whether it's Robinhood or Webull, or Stash, you can buy fractions, and also M1 Finance, okay? So you have M1 Finance, you have Stash, you have Robinhood, and you have Webull that you can buy fractional shares. So don't look at the dollar amount. Look at the growth potential. Look at the PE ratio. Look at things, whether a stock is undervalued or overvalued, because we want to look at stocks that are what? Undervalued. And again, I think this video is probably a month or two old, where I actually broke down the PE ratio. So if you go on my channel, if you go on YouTube, you put in financial literacy or Ross World, and you type in PE ratio, you should find it. Okay, so you can understand that amount. All right, JD, American Depository Shares, also called JD.com, is a technology-driven e-commerce company. It engages in the sales of electronic products and general merchandise products, including audio, video products, and books. Sounds like Amazon, right? The company operates through the following business segments: JD Mall and new businesses. The JD Mall segment represents its core e-commerce business. The new businesses segment includes logistics service, provides to third parties, sounds like Amazon, technology service, overseas businesses, insurance, and the O2O. It also provides an online marketplace, sounds like Amazon, whereby third-party sellers sell products to consumers primarily through its website, sounds like Amazon, and mobile apps. The company offers advertising, logistics, and other value-added services. JD.com was founded on June 18, 1998 by Qing Donglu and is headquartered in Beijing, China. It sounds like they're in competition with Amazon as well as no other than Alibaba and also AliExpress. That's what it sounds like to me. They have over 250,000 employees in Beijing, China. Let's see what else is pertinent to note. The PE earnings at 35.97. Okay. So this company is doing fairly well. None of the terrorists, let me look back at this 5-year line chart, right? When did Donald Trump do those terrorists? 2016, 2017? It really didn't hurt this stock. 2018, they went down a little bit. That's when we should have actually bought. Look at this, guys. 2018 November, they was at $21 a share. What if you would have bought this stock then? It's at 70-something dollars right now. It's hurting my brain. When I was, and see, I got out of all of my Chinese stocks when Donald Trump was doing the whole terrorist thing, right? You know, he's like, you know, America first, American made, and I get it, but man. All right, that's my loss. Anyway, let's move on. Collections, e-commerce, internet, retail, software services, and apparel. And it was released in 2014. Those are your collections. Look at any pertinent news. August 20th, this is from Bloomberg. I like Bloomberg. They're pretty good news. Alibaba sale growth bounced back to pre-pandemic levels. Remember last week, I did a stock review on Alibaba. So hopefully you guys looked at that and you invest a little bit of money in Alibaba. And I know one of my viewers was telling me that they have about 25 to 30 shares in Alibaba. I was actually commenting with a fellow yesterday. So that's actually good. So he's making really, really good money off those shares. And again, there's money to be made in a down or up market with options as well as individual shares. Unfortunately, sometimes when you buy and hold a share too long, you can actually lose out money because of inflation. Okay. And the only time you really can get that money back is when you sell during a pullback date or a market correction date. But then again, you'll be watching the market every day. Just for psychological reasons, I want you guys, if you can handle it, here's the difference. If you are an investor and you're looking at your portfolio each and every day, and when the market is going up and the market is going down, and that's affecting the way you feel, that's affecting your decision making, then you should not be in short-term stocks. You should be in long-term stocks, and then you should stop looking at your portfolio every day because it's emotionally controlling what you do. Now, if your emotions, if you're a business-minded person and your emotions are out of your investments, again, your emotions are out in your investments and you go off information and analytics, then it's okay to look at your portfolio maybe twice a day, once in the morning, once before an hour or two before the market close, just to see if you need to make any changes or even buy a little something, or just see how you're performing if you're that strong. Because I know a lot of people, when you become, when you're a beginning investor, you're very emotional. Oh man, you know me, I get on here, oh, I lost $500 today. And I'm like, oh, well, it's not like I'm gonna sell it now because I lost value, I lost money. Because the only time you lose money in the market is when. If you buy, let's take famous Ford. If you bought Ford at $12 a share, right? You had 300 shares at $12. Then Ford drops at $6. You're like, oh man, I lost a lot of money. You only lose money when what? You pull yourself out of the market. Okay. But then if short shoots up to $13 and then you sell, then you made money. Okay. So it's a word play. It's terminologies. Your portfolio lost value. That stock lost value if there's looking at your portfolio. But if you sell, you lose. When it goes back up, your portfolio increased in value. If you sell, you gain money. Okay. You earned money. Let's see what else they have here. Router said, edit transcripts, blah, blah, blah. That's not really important. Here we go. August 17th, JD.com sales beat scores 830 million Hill House investment. This is why they're doing good. They're making big movement. Let me see if anything I should read here for you guys. Here we go. It says JD rose 7.9% in New York after it reported a 34% jump in sales to 101 billion won, 29 billion in the June. That's for American dollars. Excuse me. In the June quarter, its fastest pace of revenue growth since 2017. The company also disclosed its JD Health division. Man, this is looking so much like Amazon. Don't forget that Amazon does those pill packs. They send people every month. So that's in their health division. So JD Health division will get more than 830 million from Hill House, the investment firm founded by Xing Li with money from Yale University. Okay, Yale. Through their purchases of Series B preference shares. The funds will also be used to its strength in its pharmacy supply chain. Okay, I'm noticing when Chinese companies mimic American companies, they do absolutely well. And if you look over here to the right, I know it's pretty small. Let me see if I can blow it up for you guys. Right here, you see this? You see the Baba over here? They're up 3.5%. Then the Alibaba Golden Hoot Limited, that one's up 1.1%. And then look at JD. They're right there under, I told you. So you got Alibaba, you have Alibaba Express, you have Amazon. All of these are kind of swimming in the whole e-commerce market. So I'm telling you, I think I'm going to buy some shares of JD.com. Out of the three I gave you, JD is looking like the stock to buy. All right. Let me get my notes together for you guys so I can give you the rest of the information. Just bear with me as I set this up, okay? So, Airbnb. Let's talk about Airbnb. Now, these are for honorable mention. This is not the hallmark of it. So, Airbnb is coming out. They're releasing their IPO, initial public offering, okay? So, let's look at the story that they have here. I don't know about Airbnb. I don't know. Everybody likes Airbnb. I've used Airbnb myself. But let's look at this. Airbnb banned parties at rentals ahead of initial public offering. They banned parties. People would rent out Airbnbs, a cool place like this. You see that? You know, I can just picture a great party. You got a bar right here. You sit a little like a seashell or an egg, something like that. You got a bar up in there. You got some chairs. You got people around the pool. You got people up on a balcony. It's a small little place, but it looks cool. You got some speakers out there. I can see how a party would just be really, really well at this particular location. But when you say that you're no longer going to offer parties, the millennials, they're like, I'm just going to go to a hotel then, you know, because that's what they love to do. But a lot of these young and older people, don't get me wrong, I'm not being, I'm not being discriminatory against age, but we know who loves to party in a certain manner. I'm drinking scotch, they're drinking beer. We're drinking Jim Beam over here, but, I'm drinking bourbon. Anyway, let's read a little bit about this. I'm just going to jump to the second paragraph. I don't know if you guys can see. Let me blow it up for you guys. All right. The company was previously valued at $31 billion. I'm going to say it again. The company was previously valued at $31 billion, but came down to $18 billion ahead of its confidential IPO listing. Do you know how much that absolutely dropped, ladies and gentlemen? That is ridiculous. The evaluation dropped from $31 billion to $18 billion ahead of its IPO listing. There is no word yet on when the company will go public, but as soon as regulators are finished with an initial review, the company will begin the process of going public with a traditional IPO, according to the Wall Street Journal. Here we go. Airbnb saw major losses related to the COVID-19 crisis early in 2020 and estimated that it lost around $1 billion worth of bookings in a single night when the world shut down in March. By May, the company had laid off as much as 25% of its staff to cut costs amid the financial crisis that ensued from the pandemic. Since then, however, things have picked back up. While global travel is on hold for the foreseeable future, while borders between the United States and many countries around the globe remain closed, Americans are traveling domestically. So that is somewhat helping their stock. But that evaluation really, really hurt Airbnb. Now, and I have some other information. Let me check my email here. Let me look at this really quickly. Wrote some stuff down. I think we covered that. I think I covered that, which is okay. Now, let's get into something else really quickly. Let me go over. Give me 1 second. And I'm going to read some of your notes. Good morning, Nolan Baptiste. Good morning. Good morning, penny stock investor. I hope you don't invest in penny stocks, because we'll get on that later. All right. In case you guys don't know about this, I'm just going to give you some quick information. This is kind of like my commercial break. I'm looking at myself here. Well, let's go down here. So underneath my live session right here, guys, you can go and you can comment. You see down here? So if you guys want to leave comments for me to answer later on, you have personal questions that you want to answer, you can actually go in here and leave comments. And also in my description of my videos, I have my email for financial coaching and also financial help, and all the links for Stash, Coinbase if you want to invest in Bitcoin and things of that manner. Also Webull and also Robinhood. You guys want to invest, okay? So that's just for your FYI, for your information, if you didn't know about any of that. And then once after this video, you will start seeing some of my t-shirts pop up. My new line just released on YouTube. So you will see it under the video called Financially Literate. Again, Financial Literate. And then on the back, really small at the bottom of the shirt, you will see Learn Money and Be Inspired. Okay, Learn Money and Be Inspired. All right, let's get on to some other things. So let's move on to DoorDash. DoorDash. Now, this is big news. This is big news right here, because DoorDash is in the market of Grubhub, Uber Eats, Postmates. Okay, so let's look at this right here. It says DoorDash certainly looks well positioned to make a public debut. It is the fastest growing third-party delivery app and grew quickly to command the largest share of the market with 45% in June, according to the analytics from Second Measure. It says Uber came in number 2 was 24%, share with Uber Eats. And while Postmates, which Uber is buying Postmates, as I said, and 2.8 billion, okay? Grubhub, which recently agreed to be acquired by the European Just Eat Takeaway, we went over that, for 6.8 billion. It's third with just under a 22% market share, okay? Let's move right along. You got Spotify and Slack Technologies. We understand that Slack Technologies is also kind of like they have their own chatting app, just for some additional information. But let's read this right here. It says, excuse me, DoorDash CEO Tony X, I'll just go with that, told Fortune that he has prioritized growth. He has prioritized growth over profitability initially, but that there is a path to achieve it. Others, though, remain skeptical as the industry has largely been unprofitable since its start. DoorDash is blowing up because when I give you this next information, DoorDash is actually moving into delivering groceries. So when I think about them delivering groceries, I think that they automatically start to compete with Instacart and Amazon Fresh. They start instantly to compete with Amazon Fresh and Instacart. So DoorDash is getting to other markets that a lot of people don't understand. And when they release that IPO, I think that it may be profitable for you to initially invest. Okay, initially invest. So DoorDash, look out for DoorDash IPO. And Airbnb, yeah, ladies and gentlemen, I'm quite skeptical about Airbnb. They may come out the gate running, but I believe that they will slow down because they're not allowing parties. Okay, that's just my personal take on it. But again, DoorDash, I believe, are going to start doing great things because here's the thing. I used to have DoorDash, Grubhub, Postmates, and Uber Eats on my phone. The only delivery app I have on my phone right now is DoorDash. I just love their innovative app. Things are very easy versus some of the other apps. That's just my take on it. So if you download all of them and you went through their platforms, and it's different for everybody, but now we're talking about them delivering groceries. So they're going to start, again, competing against Instacart and also Amazon Fresh. So they're going to have their hand so far in the cookie jar that I believe they're going to be a value stock right off the gate. They're going to be a value stock right off the gate, okay? So I'm going to give you a little bit more information here. I'm almost done. I just want to show you guys something very, very quickly to see if you guys are interested in this. Let's see here. Give me 1 second, guys. I'm giving 1 second. Let's see here. 1 second here. Almost there. All right, there I am. So bear with me. You know, I got to pay the bills. So here's one version of my shirt called Financial Literate. Okay, the link under the description here will take you through from YouTube to Teesprings. And that is what's on the front of the shirt. Okay, and this is on the back of the shirt. You have the Raw Squirrel logo, and then you have Learn Money, Be Inspired. If you don't like that color, I have additional colors as well. Dark navy blue and red. If you like this color, I actually like this color right here. Flip on the back. Again, Learn Money, Be Inspired. Then I show the green. Some people are really liking the green. Okay, Financial Literate on the front again. And then Learn Money, Be Inspired on the back with the Raw Squirrel logo at the top. Okay, ladies and gentlemen. So I'm going to read some of your notes here and get out of here for today. Thank you for joining me. I do appreciate that. All right. So I don't see any more additional notes. You guys have a great and wonderful day. This is Financial Literacy 101. Learn money and be inspired. And believe me, if you don't feel like cooking, you might want to look in DoorDash, not just to eat, but also to invest. You guys have a great day. I'm out.